My colleague and partner,
Patricia Castillo.
and this is our home buying seminar. We do every Wednesday at 5 p.m. Pacific time, 8 p.m. Eastern time. We also stream it live into our social media, and we record it per social media. And this is for how to buy a home, whether your first home or an upgrade in your home. We get together every week and talk about home buyers. You know, so many real estate agents are focused just on listings, and we want to help people looking to buy a house find the right strategies to be successful. It's a competitive market, it's a challenging market, but it's one that if you work at, you can be successful at, and in the long run, you will win. Really excited today to have a friend. Patricia, do you want to introduce Roxana?
Yeah, so I met Roxana just a couple of weeks ago, and I was really interested in the loan options she has for, our prospective clients. So I'm introducing Roxana Strellendorf. Welcome to our call today.
Thank you. Thank you for having me.
Yeah,
Roxana. So give us a little background, Roxana. What is it that you, first off, where'd you grow up and how did you get into real estate?
I grew up in Los Angeles, born and raised here in California.
Where'd you go to high school?
I got into the mortgage business back in 2003. So a long time ago. And I don't know why. I just decided one day I want to try something different. And here I am almost 20 years later, and I absolutely enjoy it.
Wow. So where'd you go to high school in Los Angeles?
At John Marshall High in Los Feliz.
John Marshall in Los Feliz. Okay, very good.
And that's where I went to school, high school.
Is it?
Yeah.
How about that?
I grew up around the Dodger Stadium area. So I went
I grew up in East Hollywood.
Yeah.
Wow.
John
Okay.
Marshall High School.
We might have gone together.
Well, yeah. How about that? You guys didn't even know each other. How about that?
You feeling left out, Bill?
No, because none of the girls pay attention to me when I was in high school. So I'm not, this is just like I'm reliving my high school years through this. Like neither one of you even asked where I went to high school or care. So that's okay. I won't take it personal. So, and so Roxana, you are in the loan business today?
Yes.
And what company are you with?
Mission Mortgage out in the Mission Hills area.
Mission Mortgage at Mission Hills. And so first of all, how would you describe them overall? What would you say is the basic, short version of there's a million lenders, they specialize anywhere from this to that. What would you say is Mission, what makes them special and why are you there?
Well, we are a broker, so we do work with a variety of different lenders. I have so many different programs that I can work with. And today we are offering some really special programs that not a whole lot of lenders offer. In fact, there are only 2 different companies in all of the United States that offer this particular program, which is a completely stated income program for a primary residence purchase.
Wow.
Yes.
So for those who don't know, I've been around for a while. Describe what does stated income mortgage mean?
Stated income means that you don't actually have to have an income source. You state your income to me, and then that is what I have to put on the application. So
the people call those liar's loans, but you guys are going to, so there's certain loans where you're going to check, and there are other ones where you're not going to check. Are you guys going to check the company? Do you do a verification of employment or look at the business and verify?
We do not do a verification of employment. It's just what you tell me is what we put on the application, and that is all.
Okay. And so for a purchase, this is owner occupied only.
Owner occupied or second home.
And so how much down payment you have to put to get a loan like that?
Minimum would be 20% down. That would require a 680 FICO. I can go as low as a 640 FICO, but that does require a much higher down payment.
So
around
680
the 30%.
is pretty reasonable. It's not
I agree.
out of reach for most people. That's fantastic. 20% down is doable. Is there a maximum loan amount?
There is $1.5 million for that particular program, which is not that bad actually.
Right. So if you have 1.9 something million dollars, and you so if you have $400,000 to put down and you want to borrow 1.5 million, you can say you work for Los Angeles Dodgers and Roxana's going to lend you $1.5 million.
There you go.
What kind of rates or what kind of program is it? Fixed rate?
Now that is where it gets a little bit hairy. The interest rates are a little bit on the higher side. They are.
Well, when the lender says it gets hairy, it means it gets hairy. Just for those of you following. So go ahead.
We're looking upwards of about 7.8, 7.9%.
Okay, 7.8, 7.9 in a market where 30-year fixed for the perfect borrower is 5.5 isn't that bad. It's a premium.
I agree. There's no prepayment penalty on that type of a loan. It is a 30-year fixed, so it is not an adjustable loan.
So hold on a second. No prepayment penalty. So what that means is, if I don't really qualify, and this is a common case where somebody owns a business and they had, let's say, a good year in 2021 and they had a great year 2022, but they haven't filed taxes yet for this year. You're going to average out 2 years of tax returns. They're not going to qualify. I can buy the house today with Roxana. The rate's only 7.5%, 8%. And then come 2023, April or May, when I file my taxes, I could perhaps qualify for a different loan with them as a paper loan or somebody else and refinance and get a more competitive rate. But at least I can get in the property based on what I qualify for now.
Exactly. That's exactly what this program is designed for, especially what we have lived through the last couple of years with our income sources up and down. This is the perfect program for primary borrowers to buy a home in this current market and later refinance. All they really have to do is stick with the loan for 6 months.
Wow. So is there exclusions? Like, do you not do loans to real estate investors? You don't do loans to real estate agents?
Actually, this is perfect for real estate investors and for small business owners that don't report a lot of income on their taxes. That's really what it's designed for. And there are certain fields right now that Fannie Mae and Freddie Mac are not lending to, even if you have the source, the income coming in, such as the cannabis industry. They're not allowing that type of income to be used for a traditional loan. This would be perfect for folks who make a lot of money in that type of a field and cannot use it.
You know, self-employed, I tell you, I was thinking the other day that we lived here in West LA. My wife and I lived here for about 25 years. And there are about 4 times that we looked to buy a house when we moved here, and then we looked to upgrade 3 other times. I kept thinking, why did I not look continuously for a house? The answer is I didn't qualify continuously. And when I did qualify, I'd have the money, meaning like last year I had 2020 I had a really good year. 2021, I also had a really good year. 2022, my taxes are done. It turns out now I have both cash and could qualify. But 2022 might be less, 2023 might be less. So all of a sudden I won't qualify again, or I'm scared to use the money. And so by the time you qualify, which is a year and a half after you have a good year as self-employed, you may or may not have the cash or feel as good about it as you do at that time to qualify. And so this is ideal for somebody who qualifies because they have the money and the confidence. They may not have the paper at the time to do that. So it's a perfect loan.
Exactly.
How long is the rate fixed for?
One more time.
How long is the rate fixed for?
It is fixed for 30 years.
Oh, wow. Fixed 7.5%, 30-year fixed rate, and no prepayment penalty after 6 months. You can refinance it. That's a fantastic loan.
I agree. And the 6 months, it's not an actual prepayment penalty. It's just a lender suggestion. So you don't actually have to keep it for the 6 months. That's what they suggest, especially if we're going to refinance and try to use a different value for the home, because we will need a new appraised value. If you've made improvements to the home and stuff like that, then we would want to use a new appraised value for the refinance.
Fantastic. Wow.
I think that's really good too for some of my clients. They were laid off during COVID. And so they have that employment gap now, so we're out of that 2-year employment requirement. And this is a really good opportunity for somebody that was possibly laid off, just got back to work. Maybe they've been working for, 2 months or 6 months. That's actually the situation with one of my clients right now. She was working with a company for over 2 years. So she met that 2-year requirement. Then she was laid off during COVID for 8 months, and she just got rehired about 2 months ago. But, she has her money saved for her 20% down, like this loan requires. So this is a really good opportunity, I think, for some of those buyers that were pre-qualified and, possibly had the money already saved up for a down payment, and then they lost their job during COVID. Or maybe they got rehired and they're working part-time. So this is an excellent loan for kind of like a bridge just to get you into the property. And then after that, you can refinance, as you mentioned.
Exactly.
Well, I can imagine a lot of scenarios. How about nurses who get a lot of overtime and they don't have a 2-year history of it, or they had a lot, they made a lot of cash and not as much going forward. And people coming out of, doctors, people coming out of colleges with, nice jobs, but maybe not a 2-year history. If they're self-employed, I can think of a lot of examples that might fit. That's fantastic. Are you busy with this product?
I am actually, yes. I'm very busy with this product, and the lender is turning them around rather quickly.
Rent control. I direct your call.
Wow. Okay, so we have to quiet them off. So you let people mute themselves, and next thing you know, they're
Roxy, if somebody wanted to apply for the stated income loan, what's the process? An application? Is that through a link that you provide, or?
I do have a website. It is www.roxylens.com. And
Okay.
there is an online application that would then send the information over to me, and I pick up the phone, I give them a call and finish it all up with them and get the application started.
And there she is. When you go to the website, you'll see her full makeup, full lipstick, looking great, hair all done,
Rocking the red.
rocking the red lipstick. And then you have a qualified button right there, both for purchases and for refinances. And then if they want more personal attention, there's your phone number right there to get together with you. Well, it sounds pretty straightforward. So Roxy, as how long have you been in business as a lender?
Since 03.
Since 03.
So
you've been-
almost 20 years. I don't want to date myself,
Wow.
but yeah.
So
almost
you
20
started
years.
when you're 14 and you've been in business almost
Exactly.
20 years. So, our call is really oriented towards the first time buyer who maybe has been nervous. They've been looking, they hear, nonstop, there's going to be a crash. There's going to be this, there's going to be that. Meanwhile, housing prices still go up. Meanwhile, there's less and less inventory. What do you see about the buyers who are able to pull the trigger and move forward and having success? What do you see emotionally in those people different from the ones who never actually pull the trigger?
That's actually a really good question. I see a lot of the new buyers these days just feeling a lot more thankful for being able to purchase in this market, especially when they've tried last year and now the interest rate is a little bit higher, but they somehow still managed to get into this property. I just see them a lot more thankful these days. And I appreciate that as someone who's helping them get into their home.
It's interesting you say that because I see the same. The house is up 15%. The housing payment might be up 40% with the rates going up. But in the day they got in a house and the market appears to be still continuing to head towards higher levels. And so I literally have a buyer who we made offers on twice on the same property. And unfortunately, the first time they picked a different buyer, second time they picked a different buyer, went into escrow, and then it just fell out again a third time. This has been about 6 months. And I called my buyer back. I said, to be honest, now he's an investor, a little different, because I just got into escrow on something else, and I feel really lucky to be in something that makes sense for me. So he can't buy this property. It's a shame, but I think the buyers who stick at it, and yes, he's paying more than he would have 6 months ago, but the housing prices have gone up in that time period. So that's why you have to pay more. It's not about crying over spilt milk. It's about being realistic and where the market is and where your long-term finances are.
Exactly. And especially with rent prices these days, I would much rather help someone buy a home and pay their own mortgage versus paying someone else's mortgage. I
Right.
say that every time I talk to a first-time home buyer. It's just, it hurts my heart when they pay so much in rent when they could be buying and paying for their own house.
It's crazy what people pay in rent. I have another buyer who, I think she kind of got cold feet, but she's kind of going through a divorce. And so there's all that drama going on for about $1.5 million property in Beverly Hills. And she ended up not buying it. She pays $7,500 in a lease payment for a similar condo. That's a lot of money to be
That's
paying
a
somebody
lot of
else,
money.
right? Even though the mortgage payment for $1.5 million would be more, she'd also would own it. She'd also have equity. She'd also have the write-off.
Exactly.
And she had the appreciation, but the lease payment is just, and she said it very matter of fact, and I'm thinking, every month you got to write that check. Like, that's just going to kill you.
Well,
So,
at the end of the day, you want to pay your own mortgage, not somebody else's.
Exactly. So, Roxana, what percentage of your business today is purchase or is refinance? What was that, let's say, a year ago or 6 months ago?
Oh my goodness, it has done like a complete 180. So my purchase business now is approximately 85% purchase. Last year, I did have a lot of refinances. So I would say it would have been about 50-50 last year and the year
Right.
before. But yes, it's all purchase business these days.
So when you say 50-50, the vast majority of lenders were like 90 or 100% refinance. And those are the ones who are really struggling right now. They have no client relationships. They're out of business. I think on this call, we've been saying week after week, it's important to have a relationship with a great lender to buy a house. You need, number one, good financial advice. You need good product. And then you also need that lender to help you get the offer accepted by talking to the listing agent. And so when you tell me if last year with all the refinance activity, you're still at 50% purchase, it tells me you're still pretty focused on purchase business. What do you do or do you have to do any business development?
So I have a lot of real estate connections that I work with, and then I provide excellent service that I think
Okay.
for these my realtor partners rather. But I never stop looking for more business. I'm always out there reaching out to new agents, and that is the most important thing that I think I can offer to any agent or loan officer who's struggling today. Is always ask for the business. Always be out there looking for it. because it's not going to fall in your lap. You always have to be out there getting it.
You know, I always tell people you want to find in any vendor somebody who's looking for more business, because a hungry dog hunts best. And when you have a lender who needs to do more business, not necessarily needs as if they're homeless if it doesn't close, but needs as in they're focused. They're trying to grow their business. They're trying to help more people. They have their own personal goals. They need to close a loan to make that happen. They're going to push for you. The ones who, for whatever reason, are complacent, made a lot of money and are living off of that money for the last couple of years, maybe mistakenly waiting for the next refinance wave. Those lenders are having a tough time right now. I see it. And I see it because in every transaction, there are bumps along the way that you need oftentimes the lender to help you with, right? And you have to have the fortitude to push through that. How often do you do a loan on a purchase where there's no trouble at all? You take the app and then you just sit around and wait for the docs to go out and then you get your check. Does that happen very often?
I wish it happened more often than it does, actually. But no, I do get the problem childs quite often that I don't have any problem taking on, because I have the experience and I have the connections also with my lenders and the underwriters. I am able to work those files and put in the effort and the elbow grease to make those work. But yes, I wish they were all easy, but they're not.
Yeah. I think those of us in the business realize, and I think the real difference is people who are going to be out of the business here the next few months, they complain about problems. When you're a real estate professional, you must brag about the problems, because that proves how good you are. We get paid to solve people's problems. And when you have a loan, there's the appraisal issue, there's the inspection, and the buyer wants to renegotiate, or the seller doesn't want to renegotiate. There's different issues with the property. There's the paperwork. There's the buyer didn't tell you about certain things. Those are inevitable when you deal with human beings. And no matter how good you are, the key is how well you react to problems. And I always feel like a lender who works with purchase business is used to doing that. The refinance guy is just not going to be there. So what would your advice be? We're talking to people here who are looking to buy property. What would your advice be to that person who's been looking and they're disappointed and they're frustrated and they maybe made an offer or two? There's not a lot in inventory. What would your advice be to them to help them achieve their goal of buying a property?
In all honesty, what I would say is keep at it, because the right property is going to come across your way. And also revisit with your lender, make sure that everything is up to date. Make sure that your pre-approval is exactly where it needs to be, because you don't want to be caught trying to make an offer on a property you no longer qualify for. And also keep your options open. Please check around with a couple of different lenders. Make sure that you are getting the best deal, the best program, and make sure that you're doing what's best for your family in order to get this property.
Yeah, I always advise people to find the best lender to get started, who's going to help you get the house, and then check they're competitive when you get an escrow. But so many buyers will shop 15 lenders before they even have a property. It's just a waste of time. And the lenders who deal with them are just wasting their time. They don't know any better. But the reality is the rates are going to change from the day you call the first lender to the day you call the last lender. If it's a couple of days, the rates could be plus or minus 0.25%, 0.5%. And what you think you're shopping, you're just following the market, to wherever it is. So the best thing to do, I think, is get the advice from a real estate professional like Patricia, like me, who've been in this business, and help you get what you want. And you find a lender like Roxana who's willing to roll up her sleeves, figuratively speaking, and help us get through the process. And that's where, and the fact she's here, I have to tell you, I talk to lenders all the time. They didn't even want to spend 20 minutes to talk to prospective buyers, develop business, as if the business is just going to grow on trees for them. So I really respect you being here. For the people, before Patricia, for those that call, this is meant to be interactive. So if you have questions, feel free to put a question in the question box or in the reactions on the Zoom app. Raise your hand. If you're watching it on the live stream, put a question in the comment box. We'll reach out to you. But it's meant to be interactive. So if you have any questions, we're here to respond to you. Patricia.
Thank you. So Roxy, as far as properties that might be distressed, that need, have deferred maintenance, might need some repairs, how does that work with let's say the appraiser goes out, does his appraisal on the property, and he notates that there's repairs that need to be done on the property. Does that affect the underwriter's decision on approving the loan?
Ultimately, any repairs that would cause or pose in a possible injury to someone, those would have to be repaired prior to closing. But we do have a program. Sorry, this is where I was going with this. We do have a program which is called a renovation loan program, and it's your typical conventional or FHA loan. So same requirements as those. However, they would put some monies aside for these repairs that could be done after closing. However, the funds would be put aside in an escrow account, and all of these items would be corrected prior to the family's moving in.
Okay,
we
so
have
that
those
would
options
be
available.
an escrow holdback.
Exactly.
Mhm. And so if the buyer, let's say the buyer is taking on the responsibility of the repairs, does the lender overfund the amount of the repairs as, that subsidy to help pay for the repairs as part of the financing? Is that built into the loan?
Exactly. So we would use the after repair value of the property in order to fund those actual repairs. So it's basic numbers. 250 is the property price with the repairs that are needed. After the repairs, it'll be 300,000. So they'll fund that 50,000 in an escrow holdback, and they would use those funds to make those repairs after closing.
Okay, great. And this is good for a 1 to 4 residential?
Exactly. 1 to 4 primary residence.
Okay.
And this, I think, is the most underutilized piece of business or opportunity for a buyer in the entire industry. And I'll tell you why I say that. Buyers prefer to find a house that's ready to go. I remember before we lived here, the last house my wife and I lived in, I bought it. I was a real estate agent. I knew the real estate agent. It fallen out of escrow. I'm sorry, I was a lender at the time. But I knew the area. It was exactly where I wanted to live. It was exactly the house I wanted, except inside it was run down. The carpet had to be, every surface had to be redone. Paint, carpet, tile, everything. It was moldy. It was dirty. It was filthy. It was a great lot, perfect location, perfect lot, perfect everything. But inside it was terrible. I brought my wife there and she started crying. I said, honey, we'll redo all this. We'll redo the flooring, the whole house. We'll paint the whole house, the whole thing. Well, whatever we have to do, we'll make it nice. But this is perfect for us. And I got her to see what was possible. And it was the best house we ever bought. Made a fortune on it. But that's all that flippers do. If they take a house that's not good and make it nice, buyers often can't do that. But with that loan, with a rehab loan, they can. It takes a little imagination. It takes some preparation. It takes some planning. But in a market like this, where the housing prices have gone up, if you can find a house that otherwise is perfect, but needs more work than you might want, if you can get over that and do some of the work yourself by not necessarily doing the hammering, but hiring the guy who's going to do the work, you can save a lot of money. And it's a loan that most lenders don't want to deal with because it's more work. But I think Roxana is one who's willing to, again, roll up her sleeves, figuratively speaking, and help you get there. And so this kind of thing that takes planning. You got to know what you're getting into. You have to know the rules. You have to have the right money aside. But the fact she even brings it up tells me this is an opportunity for you to talk to her about. So anyhow, thank you for bringing that up, Patricia. Sorry about that.
Thanks, Patricia.
Yeah, I also had another, encounter with a buyer, and I think this is a great loan product for the situation. So one spouse has a social security number, the other spouse maybe has an ITIN, and so that borrower is probably not going to go on the loan, just the borrower with the social security number. But the other borrower, the second borrower is actually, the spouse is actually going to be contributing, or maybe there's a, child that's an adult that's going to be working and contributing to the payment, but they're not going to be on the loan. So in this case, I think it's really helpful when you have one borrower primary going on the loan, but you have a combined household income that's going to contribute to the payment, but they're not going on the application. So in this case, this would be a really good loan program to utilize for that type of purchase, just to get that family into the home.
Exactly.
And by the way, do you work with ITIN?
I do have an ITIN program. They had gone away for a very brief amount of time, but they came right back. So we can do full documentation on that and a bank statement, ITIN loan. Okay. Yes, we can do those.
Perfect.
They do require, of course, a little bit of a higher down payment. Yes.
Is it still 20%?
With a good score.
Okay. Wow. 680 or above?
Exactly.
Kind of things, if you're a buyer 6 months ago, a year ago, and you work with a lender, they didn't quite tell you about other options because you have an ITIN number instead of Social Security, because you didn't have provable income, but you have money in the bank. This is your opportunity. This is what you're waiting for. You have lenders now who put the time in to help you. Patricia and I are glad to direct you to the right people. Roxana, obviously being one to talk to. Her information's in the chat box and as well as the streamer down below. Any other questions, Patricia?
No, I think we covered that. That was my last question about the ITIN program and how that, that was available to the ITIN applicants.
And again, what would Itin loan be for somebody who doesn't understand that terminology?
An I-10 is a taxpayer identification number for folks who are here not fully legally, but they do file taxes with an IRS issued I-10 number.
So
They do
there'd be
file their taxes and they work here.
green card or work permit or what type?
No, neither.
Oh,
Not
but they're
legal.
here, but they're paying taxes to avoid.
As long as they're
that.
paying taxes, yes.
Wow, I know there was the time was that we're not such people, but I guess is that a common thing?
It is. I've actually closed several of those in the last
Wow.
few years.
I remember having those when we had people coming from China. I used to work in Walnut. We were like the center of the world for where Chinese couples would come in. The mother would live, or the wife would live in a house for like a month, give a baby, and leave. They wanted to buy their own house, so they didn't have any anything but bank statements or assets here. And then they started buying businesses. And they had an ITIN, so we did loans for that type of situation where they really weren't going to be here very much. But interesting. Okay, good. Okay, I think we covered a lot. Any other? I don't see any questions in the chat box, or I don't see any questions on our social media. If you're watching this on the replay and you have questions, feel free to jump in, and we'll catch up with you when appropriate. Any last things you would say, Patricia, before we wrap up?
I just want to thank Roxana for joining us today
Yeah.
and explaining all of the loan programs that she has to offer. I think she has a wider variety of loan options for
Yeah.
buyers that are coming back into the market. Some are just entering, some are, re-entering because they got priced out last year. So something like this is what buyers need. They need more options in today's market with the higher prices. So thank you for being here and explaining everything to me.
Thank you for
Our
having me.
viewers.
I really appreciate it.
Yeah, great meeting you, Roxana. Thank you so much. And again, it's Roxana, how do you pronounce your last name? Stralendorf?
Yes. Strallendorf.
Stralendorf.
Yes.
Okay, we'll practice that. Her
Okay.
email is roxy@mymissionmortgage.com. And
Correct.
her phone number she has on her website is 323-376-9260. We put her contact info in the description, or it's also streaming across in front of the YouTube. So Roxana, thank you Roxy, thank you so much for being on call today. We really can't mute myself. Thank you guys. Raina, I can unmute you. There you are. You're a regular. We just had somebody else come in. Thank you, Raina. Thanks so much. Roxy, thank you so much for being on. For the rest of you, we do this call every Wednesday, 5 p.m. Pacific, 8 p.m. Eastern. We stream it on our social media live, also record it and put it on there as well. If you're looking to buy a house, if you're looking to upgrade into another house, we're here to help you. Patricia Castillo and I are both real estate agents here in California with eXp Realty. We have friends all across the country. We have lenders like Roxy who are able to help you all across the country. So feel free to reach out if we can help you. And then if not for today,